This is a very strong buyout target, in my opinion. In fact, if you pushed me, I would say it's probably my top takeover target. This is going to be bought. There, 99% this is going to be bought out. And of course, when it's bought out at a premium.
And welcome to another episode of the Kinvestor Report, where I chat with industry experts to discuss the market, commodity stocks, and the economy. As always, this does not change. I'm your host, Arlen Hansen. This interview is not investment advice. I'm not a professional advisor or a geologist or mining engineer. I have been kicking rocks for 25 years. I've visited mine sites around the world, exploration sites around the world, and hopefully have learned by now what does and does not work in this market. Any financial interest Kin or myself has in the companies mentioned in today's interview will certainly be disclosed, and be sure to do your own due diligence. Do not be an idiot and buy stocks just because a couple of goats are talking about it on a podcast. We're heading into one of my favorite parts of the junior mining calendar. Companies have been drilling all summer, and we're upon the season where exploration results are going to start coming out. So today, Jeff Clark and I are going to break down how to read drill results, what actually moves a stock, and which companies could be positioned to deliver this fall. If you don't know Jeff Clark, he's a prominent precious metals and mining stock analyst, author, and the founder of thegoldadvisor.com, and a recent grandfather. He operates Pager, Prospector, an investment advisory newsletter focused on resource and junior mining stock picks, and a guest speaker at mining conferences around the globe. Well, Jeff, welcome back to the show. I heard you're in Vancouver.
I'm in Vancouver. Yes, I love it. Yeah.
I actually think you're in my office. I think you're in my office right now, aren't you?
I am. I took over one of your offices, Arlen.
Yeah.
It's great.
I'm in my home office. Well, hopefully everything got set up okay. Well, Jeff, in my intro, we talked about like all these companies have raised a ton of money this year. And a lot of them have been drilling during the summer, like exploration season. So let's talk about like the exploration season results season coming up, versus earnings results as exploration results. What companies, who should be looking out for, kind of some red flags, also some green flags, things like that, and just kind of getting some people prepared on some names to watch for the upcoming result season. What does the fall exploration cycle typically look like? And do you think the setup is there for another seasonal run in the juniors this year?
Absolutely. A couple things. First of all, most of these companies are drilling and exploring during the summer months, spring, summer, maybe a little into fall. But what that means is a lot of the results come out in the fall and winter. So that's what we have to look forward to. Some of it's starting to trickle out now. The thing about this year that's different, though, Arlen, you remember last year, and I think a lot of the audience knows, the financings from these companies, especially the better, stronger companies, was huge. I mean, the company that raised $1 million 2 years ago was all of a sudden raising five. The company that raised five was raising 10, 15, 20. The company that raised 20 was raising 50 million. What that means, it's a strong indication of what the fund managers and institutional investors, high net worth investors think of this sector and the potential they see. But what it means for us, for any smaller investor, is there is a ton of work that is ahead, a ton of results that's going to come out. That means that the likelihood of a discovery, of building a resource, of growing a resource, all of that is much higher this year because you're putting a lot more money into the ground. And so that's why I'm excited. Even though the gold price is down, and even though some junior mining stocks are down, they've gone soft here over the past 6 months, whatever. The results that are ahead are very important. It could be very compelling for us as junior mining investors.
Right. And we'll get into some companies that are kind of putting these results out later, but let's talk about the drill results that actually add value for shareholders. And that's what I think people should be excited about. With this money raised, now companies are able to start adding value with successful drill results. Now, oftentimes we'll see some huge splashy numbers, but maybe the stock doesn't move. Is that because they're more infill drilling, or they're drilling for confidence? Like, why does that happen?
That's a good question. If it's infill drilling, that's an important distinction that you're making, because if they have a resource or if they've made discoveries here but they're drilling in between that where that discovery is already known, that has less of an impact at least as far as the market goes, as far as the stock goes, because they already know there's a discovery there. It's when they do step out drilling or step out exploration where you can really see that big impact if it's outside of a previous area where there's been a discovery.
Right. Okay, so the things we want to see to add value are either a brand new discovery. Those are always the most exciting. All
You're
right.
right. They can be very exciting.
Or a discovery that's been made and companies are stepping out meaningful amounts, right?
A
Um,
meaningful distance,
I
right?
mean,
If they're stepping out 10 meters, that's not much. But if they're stepping out 100 meters or 200 meters, and they make another discovery that's similar to the one they already had, that's very meaningful.
yeah. Well, I guess even 10 meters could be meaningful depending on what kind of deposit you're going after, right? Like a high-grade
Sure.
uranium deposit in Athabasca, 10-meter step out could be very meaningful if you're drilling $7,000 rock. But
Right.
but for something that's like a meter thick and 2 grams per ton and you're stepping out 10 meters, there's not a lot of value being added with the drill bit there.
Right.
Right. Okay. So, okay, thank you for that. Now let's talk about grade thickness. Over the last few years, I've noticed more and more companies promoting and marketing, maybe not in press releases as much, but people talking about grade thickness.
Hmm.
Tell our audience what that means and why people are using it as a measure or a benchmark.
So let's say a company reports, 10 grams per ton, a hit that has 10 grams per ton gold. That's high grade. Even if it's underground, that's considered high grade. But what does it mean? How meaningful is that? And how much ore is there? Ore being defined as not dirt, but actually mineralized material that can be mined. So, how do you measure that? Well, the common way to do that is to multiply the grams per ton by the meterage, the thickness of that hit. So, 10 grams per ton over 1 meter is 10 gram meters.
Right.
If it's 10 grams per ton over 100 meters, well, now you've got something very significant in the mining industry, 10 times 100. So that would be
A thousand.
on the order of snowline gold. I mean, that's the
Yeah.
kind of thing you're looking at. It's not all that common. It happens regularly in the industry, but most companies aren't getting those kind of hits. That tells you that there's a lot of ore in that particular hole, potential ore, I guess we should say, because you don't know metallurgy and all that yet. But
Mhm.
that's a very meaningful way to find out for yourself, okay, what is 10 grams per ton? What does that mean? How mineralized is that? Is it going to be economic? Because asking if it's economic is the number one question you should be asking, even on an early stage explorer. It's subjective and you don't know the answer yet, but you always want to have in the front of your mind, okay, is this potentially going to be a mine someday? Because if it's not, there's no reason to be investing in it. Is it going to be a mine? And so 10 grams over 1 meter, 10 grams is nice, but it's not a very thick intercept. 10 grams over 100 is. And what'll happen sometimes, I suspect you're going to ask me this, is, you'll get a 100-meter hit, but that 10 grams per ton is only in a very small part of that intercept, right? And the rest of it isn't mineralized at all. So it's
Mhm.
not really 100-meter intercept. It's more like that, 1 or 2 meter intercept, because that's where all the ore is. That's where all the high grade stuff is. So
So it sounds like grade thickness to me is really just a first blush. Whoa, that's a big number. Now we got to peel back the layers to see what's really underneath in this hole. So
that's a
what are the things that people have got to be looking at in that? So you got a 100-meter cut of whatever, 10 grams per ton. What are the things that you got to be looking out for? Because the old adage say for every good drill result that's announced, there's a liar on top of the hole.
you're right.
So
Right.
what do the people need to look at if they see a good grade thickness number beyond that?
Is it spread out throughout the hole? Or is it just a very small part of that hole? That's the first thing. How much of that hole is mineralized? Okay.
Okay, let's stop there. So without what you're trying to say here is some people may take a meter intersection within the 100 meters, and maybe within that meters there's a 70 gram, 100 gram per ton visible gold hit. And what they do is they spread out that little intersection all the way across 100 meters to lower the grade of the entire intercept. but they're coming up with a big number that makes sense, even though there could be multiple intersections in that whole a void space of non-mineralized mineralization, which would not make it economic or be very more difficult to mine in that situation.
That's a great point. What a good press release will do, what an honest management team will do is they'll show you the intercept in a map and where the mineralized material is. So there's nothing that's perfectly mineralized throughout. It's always going to vary, right? Even snowline gold hits, it's always going to vary, right? So again, what you're looking for is to make sure in that map, okay, is the hole itself fairly well mineralized, and it doesn't have to be high grade. It just needs to be mineralized, meaning, realistically, probably a gram per ton. The deeper you get, you want to get closer to 3 grams per ton. So you got to look at that hole and that map. And if the company doesn't show that, if they don't display that, if they don't tell you that in the press release, ask them, write to them. These are small companies. They're accessible. They should be able to answer that question too. And sometimes you get good answers, but most of the companies that we're working with, we like the management teams. We think they'll be honest with you. But every once in a while you'll get one who's just blowing smoke. So you have to watch for that too.
Yeah, I think A-Mark Resources did a wonderful job of doing that on their discovery. Like they literally put out every meter. I don't want to say meter like on a factual, but I remember them putting out every intersection all the way through so people could see how consistent that was.
That's great. I
Yeah,
love it.
yeah,
Yes. And that was a genuine discovery hole. And the market agrees with that, right? The stock, tripled in a week or something like that. So
yeah.
that was a bona fide discovery. And you can see that hole was well mineralized. It was a very long intercept, good grade, and that's what a discovery consists of.
Yeah,
That's a
that's
good
a
example of a discovery.
yeah, bona fide discovery. Okay, so now we talked about the grade thickness. Now I want to talk in value per ton, right? Because a lot of people start talking about, oh, XYZ grade equals XYZ dollar per ton in the ground. Now, a lot of these public companies aren't allowed to disclose in that manner anymore, right? Um, be-
For good
uh,
reason.
for good reason, right? But let's talk about what's the important of value per ton and how does that change between like an open pit scenario or a block caving scenario or an ISR situation. You can't just look at value per ton either. Is that correct?
Yeah, right. It depends on the metal. It depends on how deep it is, if it's going to be near surface or underground. It depends how well the hole is mineralized, like we talk about. It depends on whether it's a bulk tonnage asset. Bulk tonnage meaning it's lower grade, but it's big. Bulk tonnage assets that are mineable tend to be very big. So you might get a half gram per ton gold, but over 300 meters. So that's a
Hmm.
very good intercept. That implies it's probably a bulk tonnage asset. Those tend to be closer to surface, so it's less expensive to mine. Where you tend to get commonly in the industry is higher grade intercepts at underground depths, meaning 200-300 meters or much deeper. And you need higher grade because it's more expensive to go down and get it, right? So you have to watch for those things and consider all of that.
Is there a rule of thumb or a back of the napkin number here that says, hey, for an open pit scenario, you kind of want at least XYZ value per ton, and for an underground scenario, you kind of want an XYZ value per ton? Now, I know everything will change on CapEx and jurisdictions and NSR royalties and all the
Yeah.
minutia details,
That's what I was just
but
going to say.
is there, like an open pit scenario, like what kind of at least minimum value per ton? And it doesn't matter what kind of metal we're talking about now because we're talking about economics.
Yeah, exactly, Arlen. It all comes down to economics. Is this or does this have the potential to be a mine someday? That's what you always have to ask. Every press release comes out. That's what your number one question is going to be. And again, you don't always know that answer up front, but that's what you want to be thinking about. A lot of these things are early stage, so you're not going to always know, but you need to look at something that's going to be economic. So yes, of course, with gold. That's different than with silver. The grade with silver needs to be higher because silver is much lower price, so it takes more silver to be economic. Um, but again, if it's bulk tonnage or whether it's a silver vein, if it's near surface, that's going to be cheaper to mine. So for me personally, Arlen, I'm looking for, and I say this in the book, pay dirt. For you to qualify as a pay dirt hit, that intercept needs to be 100 gram meters gold or 1,000 gram meters silver. That's what I'm looking for. Now, it doesn't automatically mean it's going to be a mine because of all the other factors you mentioned. And even lower grade than that could be a mine. You don't know that, but you're looking for some minimums that'll tell you, okay, we're on the road, we're on our way. This is a great start. Let's see more of that.
Hmm. Okay. Now often what we see as well is metal equivalents, right? Like,
Yeah.
oh, we've drilled 100 meters of 1% copper equivalent. Break that down. What are they trying to tell people there? What does it really mean? And what are the things we got to look out for when people start talking these?
Well, if it's copper equivalent, gold equivalent, doesn't matter, silver equivalent, whatever it might be, you want to make sure that the metal they're reporting in is in fact the dominant metal that's in that hole. The other thing is if it's, a copper equivalent of, 1 gram, let's look at that and see, okay, well, 0.2% of that was copper and the rest was byproduct metals. That's not a very strong hit. That's marginally and maybe not economic. So you want to look at that and make sure that the dominant metal is the one that's being reported that has the highest grade hit in that hole. You want to look at the hole itself and see how the copper is distributed, or gold or silver, whatever the case might be. You want to make sure it's within that hole and not a very small part of that hole. And then you want to make sure that the equivalents are mineable as well. So if you're getting, 10 grams per ton silver, that may or may not be economic when it comes time to mine. So uh, you want to look at how much copper's in that hole to make sure that's the dominant metal and that's the one that really is driving that hole, meaning it's the highest grade or the greatest percentage of that hole. If they report 1% copper, but only 0.2% of this copper, that's not very good. But if 0.8% is copper out of that 1%, that's
Mhm.
much better, of course.
Yeah, I see this much more in the silver game, to be quite honest, because silver, a lot of these silver, most silver production is a byproduct, as we all know, and you often get like a lot of lead and zinc associated with these epithermal
Right.
silver deposits. So often in silver names, there'll be silver equivalent, but when you look at the lead and the zinc, you start getting into like the 60-70% range. So that's
Yeah,
just
see
something
that
I've seen a lot in the last few years. So that's well,
is that really a silver deposit?
sounds like it.
Is that a silver intercept? Maybe not. But you're right, it is common for silver to have these byproducts. They're going to be in there. It's fair to include them because they are viable byproducts most of the time. They can help you offset costs. You just want to make sure that it's actually a silver deposit.
Yeah, and we just got to make sure that that byproduct metal is not unobtainium from Avatar.
Right, exactly.
You got to make sure there's a market for it,
Right,
right?
exactly.
Okay, cool. I'm enjoying this conversation. Now, another thing I've started seeing over the last couple of years in disclosure is, and a little bit more in the BC stories than other places, which I find interesting, is actually the companies are having to report their grades in what is reasonably expected recovery rates. Have you seen that before?
Recovery rates, meaning the metallurgy.
Yeah, like the metallurgy, like you can't if let's say your assays say 1% copper, and these are all just numbers I'm making up in the back of my head, right? But you actually need to report what the estimated recovery grade would be. Have you seen that before? Like I'm starting to see that more and more in some of these BC copper porphyry names out there.
I think it's a good thing because metallurgy can make or break a deposit, believe it or not.
Without a question. But
Right.
how do you like let's say you're making a brand new discovery. And you have no idea what kind of rock is hosted in and what kind of deleterious metal can be in there or any how are companies expected to report a
Oh, you mean they haven't
reasonable
even done any metallurgical testing and yet they're reporting recovery rates?
because the exchange is asking them to.
How do they know if they haven't done any
But
metallurgical
that
testing?
well that's my
Uh,
question.
yeah, there's got to be some testing that they've done that might be easier with uranium than some other metals, but
Yeah.
they've got to do some kind of testing. I would question that. maybe not necessarily challenge the company on it, but I would ask them about it. How are you coming up with this recovery rate? It might be explained in the press release, but I would want to clarify that. Thank you, Exchange, for confusing things even more.
Well, I don't think companies want to do that. Like to be quite honest,
Exactly.
like I
It's
don't
the
think
exchange.
because it's
Right.
like, oh, we're reporting lower grades than actually what's in the assays because we have to come up with a estimated recovery rate. So it doesn't make a lot of sense to me, but I think it's something that investors should be looking at when companies are reporting because that could come down to whether things are economic or not, right?
Absolutely. Yeah. That confuses things more.
Yeah,
All you have to
I'm
do is
confused.
report the raw data and just say metallurgical testing is yet to come. We'll see how much of this is
Yeah.
recoverable.
Well, we'll drill $10 million first before we even need to start doing metallurgy because if we don't got any more ore, what's the point of spending money doing
Right.
metallurgy in the first place,
Exactly.
right?
Right.
There you go. Okay, so you talked about asking all these questions about whether these things are going to be economic or not, or whether they're not going to be a mine. What are like the five main things that you're looking at for a deposit to be potentially economic?
Well, first of all, Arlen, someone told me about a drill hit. This was years ago, and I have this in the book, but and it was a very good hit, on the surface. And I didn't know the company, I didn't know of it. So the first thing I asked is, well, who's behind it and where is it? Because those two things trump almost everything else for me. When I find out the person behind it is self-dealing, meaning giving himself lots of shares and stocks and options without paying for them, boy, that's almost a non-starter for me. I don't like that. If I meet someone, a CEO who's braggadocious, I that's almost a non-starter for me. And there are examples I could give you of CEOs I've met where, oh my gosh, within less than 5 minutes, I just told myself this is not going to be a recommendation. This guy's just bragging and bragging. This is not what I want. He needs to get humbled first.
Okay, people aside, what makes the economic deposit? We all know all the idiots in the world promoting mining stocks and mining, drill holes and all that stuff. But like, what are the five things on you look at for economics of a potential deposit?
What makes an economic deposit is going to be a process. So you're not going to know that overnight. You're not even going to know that with a discovery hole. Now, using A-Mark as that example, that was a bona fide discovery in a strong area where we know there is a lot of copper backed by a major. So we'll talk about them. But the point is that we still don't know that it was necessarily a bona fide deposit. It was a discovery, but it's a deposit. Now we need to go and prove it up, meaning we need more drilling to see if the area around it proves that up and shows there is more copper in this case that'll support an asset, a deposit. And then we need to go in to do metallurgical testing. We need to find out how much of that is recoverable. Is it going to be recoverable? Jurisdiction and team, you always want to have that in place. But is it going to grow and is it going to be big enough to matter? And I'm not the first one to say that. Lots of analysts say that. But it's got to be, you got to have that in your mind. Is this big enough to matter? If you were the
Matter to
CEO,
who? Matter to who though?
if you're the CEO of a major copper producer, what are you looking for? You're looking
Size.
for something that's big enough to matter, and it's got to have, a decent grade. It's got to be a long life mine. And again, you're not going to know that right up front even when a discovery is made. But you're looking for that because that's what you need. If you produce 1 million ounces of gold a year, you need to replace 1 million ounces of gold a year just to break even, let alone grow. So you need stuff that's big, long-lived, and of course they want high grade. But what matters more to these producers is economics. Is this economic? Is this going to be a mine that I can get behind and be big enough to make a difference to our bottom line?
A
Because
difference to the
that's our
balance sheet.
exit.
Yeah.
A junior, that's the exit. 90% of these juniors are not going to build these mines and operate themselves. They may start going through the development process, But an exploration geologist is much different than a mine engineer,
Say that
right?
again. Say that again, Jeff.
An exploration geologist is a much different skill set than a mining engineer who's building and operating a mine. And so our exit is a buyout. Uh, and so
Yeah.
that makes it very simple for us. Is this asset deposit economic enough to matter, to be attractive to that mining engineer who needs more ore? That's it. That's our exit. And so that makes it easy for us. That's what we have to look for.
Hmm. Yeah, that makes a lot of sense. All right. Enough education, or enough of us talking, thinking that we're smart and we know all these things. As we go into this next season here, I wanna pick your brain on some names. If you don't mind sharing some names that you think have got some real potential for some oomph with results that are most likely pending from now until whenever they get released. I have no idea. But
So
yeah,
the
don't want
first one we've all already talked about is A-Mark Resources, and I really do like this stock. I know Bob and Diane. I think they're one of the best in the industry. That was a bona fide discovery, like we talked about. Further drilling has begun to prove out that discovery. You have two majors, not one, but two large mining companies that are behind this company. Uh, they're putting millions and millions of dollars, both of them, into these assets to advance them, drill them, do more exploring, grow them. So this is a very strong buyout target, in my opinion. In fact, if you pushed me, I would say it's probably my top takeover target. This is going to be bought. There, 99% this is going to be bought out. And of course, when it's bought out at a premium. Now, you might be anxious for that buyout, but in the meantime, they're spending lots and lots of money to drill it and make it bigger, prove it up, make it even more attractive, meaning it's worth more at that buyout. So, in my opinion, it's not too late to buy this stock. I am biased. I own it. They are a sponsor of our site, but they're a sponsor for a good reason. We invited them because of the potential there. So it's not too late to buy, in my opinion. I'm very overweight. I'm up significantly on it, and guess what? I am not taking profits because, in my opinion, is one of the top buyout targets in the industry.
Wow. Okay, I got no comment on that because they're also a client and I'm a big shareholder and I'm up significantly on it. So I got no comment on what you say, but I'll take it.
Right.
Okay, let's go to uranium. Do you got any uranium names that you like out there?
Uh, Probably the top pick for us right now is Denison Mines.
Then okay.
The re the reason is because they have the Phoenix deposit in the Athabasca. They developed it, but now they've declared a construction decision, so they are officially in the sweet spot, meaning that as they build this mine and get closer to production, they're going to become more and more attractive to investors. And that sweet spot usually leads to a re-rating, especially as they get close to production. Pardon me. So
What's their timeline? Like, and I've seen some of these production stories go ballistic the last few years. Artemis, like, oh my God, like just that
yeah,
chart is like boom, and that's the perfect example of a Lassonde curve, right?
yeah,
So
it was.
when does Denison get the Phoenix online?
I didn't check the latest on them, but this is going to be a very big mine, so it's not near term.
Okay.
So that means it's not too late to buy. The stock is up significantly. We do recommend it in our paid newsletter, so they're not paying for coverage or anything like that. But we like it because they're in that sweet spot. I do expect a bigger re-rating as they get closer to production. So we're probably looking at a couple years, but someone can check me on that. The point is they've declared construction, they're building the mine, and as they get closer to production, you can normally expect a re-rating. No guarantees, but again, I own it. I have taken profits previously, but I'm not selling what I got because there's going to be a re-rating on that stock, in my opinion.
Yeah, and uranium's had a little bit of a chill out season, let's say, for the last kind of 8 months or so.
Yeah.
And a lot of the smart talking heads are saying uranium is ready to go. Like it's going to start
Hmm.
ripping again. So
You
that
know,
that's
what's interesting is I don't need uranium to run for Denison to do well.
okay.
I watch the metal price, but Denison's in the sweet spot. They're not going to get re-rated because the uranium price moves up. That'll help, and that'll help push the stock higher. But the big run in Denison is going to be because of what they're doing. And so I focus strictly on the companies themselves. As long as the metal's not in a bear market, I don't really
Mhm.
care too much about the metal price. They're going to be their stock's going to move higher because of what they're doing and because they're going to put what is going to be one of Canada's largest uranium production assets once it hits production. It's probably the biggest one since what's Campbell Cigar Lake.
Cigar Lake, which has had its problems.
It's had its problems, but that's how big this asset is. So it's going to take a little longer to build it, but it's going to be worth a whole heck of a lot more at some point, especially when they hit that production. So I'm excited about it. I'm watching it and I'm not taking profits.
Cool. As for five, we've got Amark, we got Denison. What else is
How
on your list?
about how about Tiger Gold, another a gold pick? We need a gold pick, right?
Yeah, we
So
do. Well, I'm long this one, and they are a client as well, so thank you.
yeah,
Well, why don't you talk about what they're doing?
Tiger Gold asset in Colombia. Good team running it down there. I've been to Colombia. I've not been to this particular asset, but I've been to Colombia. They're supportive despite some issues. They're a second world country, not a first, but they're advanced, and mining is a key part to uh, where they're exploring.
Yeah.
So what's interesting is they keep hitting, high grade stuff over 100 gram meters, as we talked about. So they keep hitting high grade stuff. And just today they reported a step out. We talked about step outs too. Here's a step out. It was 192 meters, I think. Correct me if I'm wrong. 192 meters from where they made their previous discoveries. This is a big step out. The stock didn't respond, but that's because gold is selling off pretty hard. I don't think the market really understands the significance of this, but this is exactly what we look for: is a huge step out that's mineralized. So we'll see how big that is, if it really extends the whole way. All that's got to be done yet. But this is a strong asset with multiple high-grade intercepts, many over 100 gram meters. This is going to be a deposit someday. There's a high likelihood this is going to be an economic mine at some point. So I like it. I do own it. I'm not up much on it yet. But if I wasn't already in, I would definitely be buying.
It's in the same kind of area as like the Eris mining, the collective mining, and those stocks have done
That's right. Yeah,
extraordinary well too, right? So I wonder if there's any geological interpretation that says potentially there could be some of the same feeder systems. I don't know. Deep drilling will have to tell you. Like it,
right.
right?
But
So
they're in a great neighborhood
that's
and they're
certainly in a great
finding
neighborhood.
good stuff. They're
Yeah,
finding economic ore, and that's the bottom line to all of this. So yeah, it's a buy in my opinion.
cool. A couple more here.
Okay, how about a copper one? How about Getty Copper? Very
That's
few people know about this company, and I love it. But
actually I that's a totally new name to me.
it's fairly new. It's sort of a rebranded company, if you will. It's been taken over by a group that I have a lot of respect for, Charles Funk and his team, like
Oh, really?
Helios. Yeah,
Okay.
Heliostar Metals, which was
Yeah,
a
yeah.
10 bagger for us.
He's
So
a rock star.
rock star, pun intended. Yeah, he really is. So what's interesting here is two things. One, it's right beside the Highland Valley copper mine, and all of a sudden, Highland Valley's head grade, the grade going into the mill to be produced, is down at, like, believe it's 0.2% copper.
It's still
So
producing. Crazy.
it's still producing because it's big, but 0.2%. And yet, the second reason I like it is because Getty already reported their first drill result, and it was at much higher grade, more than double what Highland Valley's copper asset is producing right now. So, and they're right next door. So they have higher grade over a big width, and darn, I wish I could remember how long that intercept was, but it
Oh,
was a
I'm looking at it right now. You got 100 meters of 0.7 within 342 meters of 0.5. So yeah, that's a huge broad intercept, and within that intercept, there's a really good cut there, and it's
that's
at surface.
at surface. That's a bona fide discovery right there. You can classify that as a discovery. The stock responded when that happened. It's pulled back a little bit. They've reported a second result. Wasn't quite as good as that one, but it was still very good. And again, so they have a discovery, and they're right next door to Highland Valley Mine, which is going to need higher grade ore.
Yeah,
So run by an excellent team.
yeah.
So I like it.
I got a lot of respect for Charles Funk and his team. A lot of respect for him.
Absolutely. Yeah.
Yeah.
So I own it, full disclosure, but if I didn't, I'd be buying the heck out of that. In fact, I've been buying that and I'm now officially overweight. So that's what I think about it.
Are you front running here, Jeff? That's the first time I heard that name, to be quite honest. And I
And
typically
I
hear,
love that because it means a lot of investors don't know about it. And that means once investors find out more about this and hear more about it, they're going to come in, there's going to be more demand for the stock and make Jeff really happy.
cool. I'm gonna call Charles and get a rundown on that one. All right, do you got one more for the audience here, Jeff?
I do. So here's another one a lot of people may not have heard of. It's called Sun Peak Metals. Now they were operating in a less than attractive area, let's say, of Africa. And for a long time, I just could not get behind this. I like management, but I just couldn't get behind it because of where the asset was. And all of a sudden, they started to branch out into Saudi Arabia. Short version is the Saudi Arabian government has reversed course and they're now supportive of mining and encouraging it. And they've opened it up to foreign investment, foreign companies coming in, staking land and exploring and drilling and all that. So Sun Peak is is a first mover. You got a first mover advantage with them in Saudi Arabia. Multiple projects. They've already started drilling. Assays are imminent this month here in August. So if you like it, you might want to consider getting a first tranche at least before first assay results come out. But think of Saudi Arabia as sort of like Quebec 100 years ago. It's completely unexplored and very fertile. We believe it's very fertile. So this is a great opportunity to get in on a first mover advantage into a new country that is vastly underexplored, and a company that's drilling and has assays imminent.
Oh, great
I own it. I've gone overweight since, so I like it. In fact, I think I invested in 2 different private placements with them. Uh,
Now, they started in Ethiopia, did they not?
yeah, I didn't want to
Eh,
mention the country, but
No,
yeah.
that's no, it is what it is. We don't well that's really interesting. I worked on Nebsun for about 6 years. And this
Ah,
is kind of all part of the same belt. The Arabian Nubian field, is that what it's called?
yeah.
The Arabian Nubian Shield.
Right.
And so yeah, the geology there is spectacular.
It is. It
Yeah.
is. And the important point for us is it's vastly underexplored. There hasn't been a lot of exploration in that entire area. Very
Mhm.
little has been done. And Sun Peak is one of the first ones in there to really do systematic exploration on their project. So it could be exciting.
Yeah, well, I'll call Greg and say hi. He was the Sunridge guy, so
Yeah,
I'm familiar with that team and everything. So cool.
I like Greg a lot. Yeah,
Yeah, awesome.
good team there.
Awesome. Jeff, thank you so much for picking your brain. That was a really fun episode.
Great.
I hope our audience learned a couple things.
Yeah.
And if you're listening to this and you've got questions about some of the things we talked about, grade thickness, copper equivalent, I'm happy to give my layman's, just reach out to me. I'm happy to give some of my layman explanation on it. And if I can't answer you, I will certainly get someone who can. Yeah, you can save to Jeff with his work through his website, goldadvisor.com. Follow him on Twitter, the Gold Advisor. He also has a podcast here on YouTube called Pay Dirt Podcast, which I recommend taking a peek at it too as well. Jeff's just a great guy to get to know, very honest and transparent about what he does in the market, which I think is very valuable.
Yeah, thank you. Our goal with the website, thegoldenadvisor.com, is just to provide investors with the education and the stock picks to benefit from this sector. It's a bull market, regardless of what the gold price is doing currently. I do think there's going to be another major upleg, and we're here to provide that kind of education and stock picks because we're investors too. We invest in everything that we recommend in the free letters or the paid letters. If we wouldn't own it, we're not going to recommend it. So that's a major criteria for us. So
It's kind of like me too, man. I can't be working with clients if I'm not willing to own them myself. Like I just can't.
exactly right.
Like I
So
can't call my mom and say, hey, like
right,
if I
right.
don't have it too, right? So awesome. Hey, and
Our
actually quickly before we sign off, you've got a conference that's coming up. Is that in Vancouver?
Yeah, thanks for bringing it up. We're excited to announce, Arlen, that the Gold Advisors is going to have its very own conference. It's called the Gold Advisor Network Summit. It's going to be here in here in Vancouver on November 5th. And we'll have gold, silver, copper, uranium picks, the companies that we think are the strongest right now to own or add shares to if you already own them. It'll be myself as a speaker, Silver Guru, Peter Kraut, a geologist, Sharon Alexander, senior analyst Jeff Volks is coming in all the way from Toronto to speak at this. We're going to have a panel at the end of us four. We'll have some opening remarks. I may throw out some silver. We'll see. And we'll
Like
actually have
physically throw it into the crowd? Like
that's right. So bring your catcher's mitt.
I love it. Love it, man. Those silver dollars hurt when you get hit in the head, I tell you.
Yeah, it would hurt. That's right. And
Cool.
so we actually even have a small gift for everyone as well. So it's going to be exciting, slightly different than a myth, than a metals investors forum, but it's going to be an action-packed full day on November 5th. So we hope you can come. You can sign up on the Metals Investor Forum website. You'll see it there, the Gold
Okay.
Advisor Network Summit.
Cool. We'll make sure that we add all that info on the bottom of the podcast here. Thanks, Jeff. Very much for your time, buddy. Great seeing you. You look great in my office.
Yeah. Yeah. Thanks for letting me steal your office here. I appreciate it.
Yeah, no,
So
we're all good, and we'll stay in touch, man. Thank you so much for your time.
great. Thank you, Arlen. This was fun.